Shutterstock is an interesting stock. The core business of Shutterstock is one of a stock footage websites, where you can buy footage or buy the right to use it for a small fee. Shutterstock pays then a commission to the person who made this, so they have very low capex in exchange for the content. The stock has not moved anywhere since 2013. Meanwhile, revenue has greatly grown, so maybe this is a time to look at the stock. They of course expect everything to go great. They expect to grow at 10% forwards until 2027. Now this is of course their expectations. We shouldn't read too much into that. Now what are they gonna do with the cash they're gonna make? They're gonna buy other companies, which they have done before. I'm gonna show you a few acquisitions later on. They're trying to pay a nice dividend, 2.5% currently, not bad. And they bought back some shares, not very high amounts though, I must say. And they see their opportunity in AI. They say they have the videos, they have the data, they're gonna be able to profit from the AI boom. Here's the one big red flag with this company in my opinion. I do not see them winning from AI. Even if people are gonna make AI videos or footage and upload that to Shutterstock, Shutterstock wouldn't profit from this. They just make money from commissions. Maybe they're gonna be able to cut everyone off. They'll say, hey, we don't need you to submit your thing anymore. We're gonna make it on our own with AI and then sell it. What is their moat gonna be here? Their moat currently is that they're so big that there's so much on there that basically no one can compete. Yes, there are some other competitors, but they're one of the biggest ones. So if you want content, you have to go to them. But with AI, I as a company, maybe I want a shot of like the Empire State Building. I go to Shutterstock, pay $100. I don't know the prices right now there. Well, now I can just make it myself with AI. If they can do it, I will be able to do it. Currently, it's not feasible, but in 5 years, 2 years, I don't know how long it will take. It has already greatly improved. Maybe I'm gonna be able to do it on my own. I don't need Shutterstock. So here I disagree with Shutterstock. This is a big risk to the company. But they're also diversifying away from that. They're going to data distribution services. What that includes? Shutterstock AI, Giphy, and Studios. Now here they give the data to the customers so that they can train the AI on that. That seems fairly reasonable. That seems like a good business model. Giphy, everyone probably knows Giphy. It's just a website where people upload GIFs. People send them around on WhatsApp, Facebook, etc. And then Studios. Studios, they basically help agencies create content. And here they're saying they're gonna be benefiting from AI because of the data they have. I guess with Giphy and Shutterstock they have some slight data they can use to see what's trending, or they can put out better content. But it's still not sure how they're gonna be the only one to benefit from that, or how they're gonna have a big moat in that segment. But they have only recently rolled out these services, and they're definitely growing at a fast pace. We gotta give him to that. There are higher growth rates here than in the core content business. And I think if the company is gonna be a grower, then from these segments. When we look at the revenue segments, we can just see 10% decline year over year from the content revenue, which is the core Shutterstock business. We give you the rights to license a video or a picture. And that just has not been performing too well, because they're already fairly big there. They're one of the biggest players, if not the biggest, and that segment is currently being hard hit, and especially in the future by AI. I do not see high growth rates here, or even growth rates. 10 years from now, I do not know if this thing will exist. Now, on the other hand, 96% revenue growth year over year in the data distribution service revenue. Of course, it is new, it is gonna grow at a very fast pace. Now free cash flow, we gotta take something out of it. They bought Giphy this year, and they laid off a lot of people, so they had to pay severance. But the severance was completely reimbursed by Meta. But due to accounting, that does not count as cash from operations, it counts as investment cash, so it wouldn't be taken into free cash flow. But if we add it back to free cash flow, year over year, slightly down. For the full year, it is up by a substantial amount. When we look at the free cash flow developing over the years, of course, 2020, they had the big boom, 144 million in free cash flow. Didn't have it since then. But when we look from 2019 to now, good growth. Margins have also improved since then. 138 million is not a bad amount of free cash flow, especially on a $1.79 billion market cap. But share-based compensation is 48 million currently per year, so in reality it's less than 100 million in free cash flow. And that's also why putting even substantial amounts of money into buybacks, the share count has not moved much, but they are scaling the dividend by a lot. But where have they put that money in exchange? Acquisitions. They're on a buying spree, they're buying a lot of companies. Only recently they said they're gonna buy Backward Celebrity News. Have you heard of it? No? Probably not. I haven't. A global premier destination for celebrity news. Now how does that fit together with Shutterstock? I have no idea. They probably also don't. Maybe they will get more pictures of celebrities on Shutterstock. Maybe Backward will be able to buy them at a lower rate from Shutterstock, so the margins will be higher. Who knows? It doesn't really make sense. But what I take from this is that the company knows that the core image business and video business is not gonna be profitable for very long. They're trying to get away from it as fast as possible. And I don't think that's a bad idea, but it just shows that despite bringing in good amount of free cash flows right now, Shutterstock is not positioned well for the future. If they can pull it off with their data, with their AI, then maybe they're gonna be able to continue to grow, but it is a risky play. And that also explains why it's trading at an 11 forward multiple. And to get this thing up to where it replaces the content revenue, that is gonna take a few years, even if it's gonna grow at 20% per year. Now, if we ignore this off year, 140 million in free cash flow, let's be generous, say only 40 million in stock-based compensation, that's 100 million in free cash flow, around 36 million shares. That brings us to 2.7 in free cash flow per share. Now let's assume we're gonna grow at 8% for the next 5 years and 7% after that. That would be lower growth rates than they had before. They're gonna expect to grow in the lower 10s. We do not know what happens with AI in the next few years. Sure, they're gonna profit from it because they have the data, but is it gonna be able to replace the entire core business? Companies have already been buying a lot of material for their AIs from Shutterstock. That's why they already have a decently sized business. But will it really replace the core business? If they would already be at the revenue levels where they are right now, I would say yeah, but it's definitely going to be able to replace the core business. I do not really see AI companies 5xing their spending on Shutterstock data. I do not really see that happening. So that's not even conservative in my opinion. 8%, 7%, 14 multiple. The company's going to have a higher multiple than currently because if I make it that far, the AI risk is basically gone. 40% payout ratio, maybe they will increase the payout ratio if they stop buying new companies. I don't know, maybe eventually the CEO thinks, you know what? Celebrity news, maybe that doesn't fit to our company. Intrinsic value, $36 a share. They're currently at around 50. 26% downside. And that is without having a conservative estimate in mind. Now what if it goes better? Maybe some more share buybacks. Maybe core Shutterstock business performs better. Here you would make 10% return. If you think that's gonna happen, sure, why not? Maybe being pessimistic about the company, but I just do not like to see where it's headed. Now, this is a very conservative estimate. What if a core Shutterstock business starts to collapse as soon as possible? The AI business continues to grow, but it won't keep up with the decline of the Shutterstock business. Minus 3% revenue growth for the next 10 years. 11 multiple, $13 per share. Is Shutterstock a buy? Maybe. It is going to be very risky. Will AI replace it? Maybe there's gonna be some legal issues so that people can't use AI for their things. I don't think it's gonna be the case. It would be a big gamble. So I will stay away from Shutterstock. I will not have it on my buy list. I will not even have it on my watch list. What do you think? Write it down below. Have a good day.